2023, without a doubt, will be the biggest year in wealth transfer, in my opinion. Now, instead of showing you a bunch of graphs and stats and making it really boring, I'm gonna come to you straight up and tell you exactly what I'm investing in, where the massive opportunities lie within those asset classes, and how you can take advantage of it in the next 12 months. If you're interested, keep watching. Hey guys, my name is Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, it's no secret, just going out there and looking at how much fear around a recession and how the markets are gonna melt, it really yields some sort of emotion from you. When you're reading these things or you're watching these videos, you're like, oh, freaking hell, like the market's collapsing again, what am I gonna do? All the money I have in the market, should I take it out? All the money I don't have in the market, should I just keep it out or then invest? And it just raises more questions than answers. So I'm gonna share with you a pretty plain explanation of what I'm looking at in this market. Am I gonna miss out on a few things and not have everything detailed to a T? Yeah, of course I will. I'm gonna show you the most logical way to think about what's gonna happen over the next 12 and 18 months and how I'm actually going out and executing on these plans. Now, I have access to so much data. I look at so many graphs, I look at so many stats, and I look at trends all the time. I run a full service buyer's agency, Search Property. You can definitely go check out the website. There's a link in the description below, as well as email me if you need the help. It's gonna be pinned in the comments down below. But as a result of having all of this information, I can then go out and say, well, I know what moves I want to make and what I want to help my clients with. But what happens is, if you're not someone that sits there day in, day out, looking at stats and graphs and absorbing all this information, you find yourself with analysis paralysis. You find that you can't actually move because you're going, well, one person's saying this, but then 10 people are saying this, and then 10 people are saying that, 3 people are saying this. I'm not sure what to do. Then January becomes February, February becomes March, and then it goes to July, and then you're at November, and 12 months later, you realize you didn't actually kick the goals that you wanted to kick this year. You didn't make the moves you wanted to, and purely because you had other people invoking a particular type of emotion. As you're watching these videos, you're also going through emotions. And that's why I say, look, I'm gonna share with you my logical approach to this market. I'm not gonna share stats with you. I'm gonna share with you how I'm thinking about the next 12 months and 18 months with investing. So let's break it down. Now, be sure to stay towards the end of this video. I'm gonna break down exactly what percentage I'm putting into each of these categories as well. I'm sure you like that. Now, the hardest part in this market is going to be separating the emotions from the logic. You stick to more logic this year, and I promise you, you are going to do really, really well. That's why we need to focus on having the right team with us, and whether that's you outsourcing or whether it's you going in-house and getting the right people around you, I'm gonna leave that one for you. But as you already know, I invest in 3 main asset classes: property, crypto, and collectibles, being trading cards. Now let's dive into each category, what opportunities I can see, and which moves I'm gonna be making. Let's start with trading cards. Now, there is going to be volatility, and there is so much emotion when it comes to investing in this asset class. Why? Because largely it's driven by emotion and nostalgia. And that is what drives prices higher. Because the same kids like you and I that were sitting there playing with these trading cards and the opportunity of collecting back then versus now actually reminds us of our childhood. And money can come and go, but the reason why we travel to the same places we did as kids or go out and spend time with the people that, you know, made us really happy back then, it's all nostalgia, it's emotions. When you sit there and eat a paddle pop, it still reminds you of when you got it from a school canteen. Or when you see a TV commercial randomly come up as a meme on Instagram, you'll then go, shit, I remember when I was like 7 years old and I watched that on TV with my brother or with my sister. And that nostalgia is what drives up prices mainly in this asset class. Now, I hope if you're watching this channel and you've been watching for a while, you're not approaching it going,
this guy invests in like Pokemon cards? Are you serious right now?
I hope you don't approach it that way, because that's how most people get left behind. When you don't understand something and you're saying, well, I'm gonna discount it, I don't think that's for me, without actually having all the information, then you're doing a disservice to yourself. I remember even for myself, for so many years, I could see people were making money through like investing in other asset classes, and I was like, no, that's not for me. I'm only sticking to real estate. What I didn't realize was that if I actually opened myself up, I would know that when the bank said no to me when it came to real estate, I was still able to grow my money. I would be able to go and get bigger deposits to go and buy more real estate. And that's the whole game for me personally, is to go out, use the income, use the other asset classes to bring in more money back into real estate. That's my whole psyche here. Now, with trading cards specifically, I would love to be purchasing more sealed product pre-2020. Why pre-2020? Well, we had the pandemic, and that brought so much attention into the space. That's when I got back into the space as well. And what happened as a result was that there was so much demand relative to the supply that then the Pokemon company came out and said, well, we need to print more. And they started printing huge amounts of oversupply, and now it's not getting absorbed because as interest rates have gone up, people have had less money to go out and spend on things like Pokemon cards. So what we can see is the oversupply, just like real estate, as supply is higher than demand, prices stabilize and even fall in some cases. Now, an interesting statistic here that's going to blow your mind, and I promised you not to give you stats, I'm going to give you an overall trend of what's happened, is 100% of retail products, the sealed booster packs and the sealed booster boxes that came out over the last 20 to 25 years have resulted in a positive gain after 3 to 4 years. What that means is that if you go out there and you purchased a box anytime in the last 20 years and you held it for more than 3 years, you would be now in the green. And in most cases, you're in the green by a considerable amount. Take for instance some of the booster packs that had come out say 20 years ago. You could purchase something for about $2 or $3 and the same packs now are 100x the value. So they could sell anywhere between $300 and $500. Now, if you go back say 10 years ago, some of those packs you could pick up again for about $4 or $5 are now yielding probably about $200 to $300, depending on how rare and how good that product is. And that's where it comes down to going, well, the entire asset class is moving up, but you want to be in the best performers. And that takes a lot of research as well as a passion for this space. Now, for me personally, I've gone out and said to you guys in the last couple of videos that I've already purchased everything I've wanted to when it comes to trading cards. I've built up my position. It's worth about $300,000 in today's value. And I believe I should be growing at about 20 to 25% at the very minimum when it comes to compounding growth. I believe we've seen the lows in the market when it comes to Pokemon cards in 2022, which is when I built most of my position. Now it's just about holding that position, and whether I decide to open up a store and sell collectibles back and forth is something that I could do maybe when I retire in like 10 or 15 years when I'm bored, I don't know. But with that, let's continue. Next up is cryptocurrency. At this point, if you've been invested in crypto and you probably invested in 2021, you're now going,
I freaking hate crypto.
and it's because prices have come down. Bitcoin right now is down about 75 to 80%, and I still believe the lows aren't in. When you look at altcoins, they're down, in some cases, they're down 90 to 95%. Nobody wants to hold something and see it drop by 95%. It feels like shit. And I remember going through it in 2018, and I feel like I should have taken more profits this time around because I've definitely felt it in parts of my portfolio. However, if you can weather the storm with the high volatility, as I've said throughout my investing journey, only put in what you can afford to lose. And the reason you do that is because when it's a high volatility asset like crypto, you know that the gains are going to be crazy, and you accept that by being invested in this asset class, you can also expect it to drop by 95%. And that's what drives a lot of people to leave when it should be the time that they should get involved. Now, I'm not a financial advisor, clearly. I mean, I'm talking about Pokemon cards and crypto at this point. So definitely don't take what I say as financial advice. What you want to do is get a strategy in place, understand what risk appetite you have, and then accordingly, you can figure out what asset classes you want to be invested into. Now, the reason why crypto is very important and massive opportunity, in my opinion, in say 2023 is because when you look at the 4-year cycle, you can see that you have a blow off top, then it comes down and you have that correction, a massive bear market where you start consolidating, and then you start making your way back up as you go towards the Bitcoin halving cycle. If you want a complete breakdown of how this all works with numbers and historical trends, definitely go check out this video. I break it all down for you. Now, of course, the moment you've been waiting for around real estate. Now, we've already seen Melbourne and Sydney correct quite a bit, and there are some commentators coming out and saying that we have some further to fall. We've seen interest rates go from like 10 basis points all the way up to 310 basis points in the space of 8 months. Now, something to keep in mind is that every single time we've increased rates in Australia, when we start cutting, we actually cut faster than the pace that we went up. Now, I'm not saying we're going to cut by 300 basis points within like 4 or 6 months. Possible if you look at historical trends. But what I want you to pay attention to is the fact that we've moved up so quickly. And the reason for that was because we're fighting an inflationary problem. So as a result of that, interest rates have gone up. Many people's cash flow has been smashed, and it's pretty much put people in the defensive mindset where they believe property prices will fall even further. Their cash flow is so bad that if they purchase another property, that means, oh my God, cash flow is even worse. How am I going to pay for food? And then interest rates are going to go up by like another 300 or 400 basis points. I'm going to be completely screwed. So a lot of people leave the market, demand leaves, but we've still seen high levels of demand in different markets. This is what I specialize in with the full service buyers agency. We still have clients that made a shitload of money in 2022, despite the fact that there was so much doom and gloom. In 2023 and 2024, we're going to make a shitload more money. That's because we don't really focus on interest rates alone. Interest rates makes up one factor. It's like basically going out there and saying, you know, you could be really good at soccer by just being able to kick the ball. Now, it doesn't matter if you know how to shoot, it doesn't matter if you know how to defend, it doesn't matter if you know how to tackle or actually go and pass the ball. Just if you can go out and kick the ball. And the thing is, you're only looking at one factor at that one time. And that's pretty much how people view interest rates when it comes to Australian housing. This is why you still have markets that are growing despite the media not covering it. A couple of things that you need to pay attention to is the fact that unemployment is now at its lowest point in more than 40 years. The vacancy rates that we have, and that's basically saying how many properties are available for the people that want to go and rent it, is now at the lowest point it's been in more than 16 years. We have a severe shortage when it comes to dwellings for both rental and for people to live in. And on top of all of that, interest rates are expected to cut in 2023 and 2024. So with all of these things aligning, for me personally, I think this is a massive opportunity. I would much rather be 10 minutes early, buy up what I can before the mass herd come in and decide,
Hey, this is a pretty good time to buy.
I want to have my position already in that place. And then once the FOMO comes in, once the media headlines come in and suggest, hey, property prices are going up and everything's great again, that's when we start seeing the massive price growth in those asset classes. At that point, I can then start taking out some equity, building up my positions and my reserves to then buy up a lot more as soon as the markets collapse or correct again. Now, as a breakdown, I'm not putting any more into trading cards, despite the fact that I love it and I know that I'm going to do quite well. I feel like just based on the opportunities I have in crypto and in property, I can go out and get better returns. When it comes to a split between crypto and property, I'm putting about 35% of my cash towards crypto and about 65% towards real estate. So you might be scratching your head going, well, if crypto is going to grow by 300 or 400%, why are you still going for real estate? And you should definitely go check out this video because I detail why I love real estate so much even today. And despite everyone talking about how it's in a bubble and whatnot, I believe the biggest gains are yet to be felt in those smaller capital cities and major regional hubs, which is what we've been focusing on for clients to build positions in over the last 2 to 3 years. Now we're starting to see the benefits of investing early in these markets. I believe many markets are going to record double-digit growth in 2023, and with that equity, we then have more choice to come back into trading cards, build positions in crypto, or buy more real estate. If you guys have enjoyed this video, smash that like button, subscribe if you haven't already, and share this video with someone that's really scared and wants to make some moves in 2023. Thank you so much for watching, and I'll catch you guys in the next one. Thanks, guys.